Canadian gold company Golden Goliath may have just made one of the best gold strikes of this century. Their stock started to take off last week when the company announced that the first batch of holes in their Golddigger property were back from the lab, and that some of the grades included more than 1.5 ounces of gold per ton over 39 meters, with 5.5 ounces per ton over 8 meters. Those are the highlights, of course, but there's high gold grades across mineable widths all throughout this whole first set of results that the company released last week. That's got everyone's attention, including the mining press. So it's trading some pretty high volume right now, acting like a stock with a story that the street is coming around to like. It's catchy, it's bouncy, you can dance to it. The company has to be happy with this action, but there's good reason to think that this is just the first move. Mining.com can do the math and knows what to do with $638 per ton rock. So do their readers. But the wider business press hasn't really started writing about the gold strike just yet. And when they do, it usually spreads around enough blood to start a feeding frenzy. That usually comes after the stock has made a few big moves upwards. And as of right now, it's only made just one. Like all good gold stories, it's got us wanting more, and like all great gold stories, it's making it easy to believe there's a lot more to come. As usual, we're here to make you understand the deposit and the company. Let's dive in. Of the 105 holes sent in for assay, 89 are still being processed. Goliath's program at Golddigger is already a tremendous success, and not just because the early assays are returning big numbers. This program hit mineralization in all of its 265 holes, and the geologists can use that information to make preliminary models of what they're finding. The targets being drilled here are along a contact zone between two rock groups called the Stahini Group and the Hazelton Group. This contact is often called the Golden Triangle, and Goliath calls it the SK Rift. This contact zone got its name from the legendary SK Creek mine. It's also home to Seabridge's KSM project and the exceptionally high-grade Bruce Jack mine, among a bunch of other ones. Now let's talk about gold deposits. Gold deposits are created in areas where the mantle layers of the earth came up and busted through into the crust. They call those plutons, or volcanic intrusions, or igneous intrusions. And they aren't special. They're all over the place. These intrusions happened 200 million years ago and probably took another few million years to settle and cool and become rocks. Like I said, there are volcanic intrusions all over this area, but the ones that cooled under the right amount of pressure at the right speed developed mineral deposits either in them or near them. Now, if you're a mining company, finding mineralization is the first step. Goliath first drilled this mineralization in 2021 to test the extent of a zone that was first identified right on surface. The outcropping is in a fault in the sedimentary rock of the Hazelton Group, right along an area where the sediments are heavily faulted. So after poking a couple hundred holes in it over 3 drill seasons, Goliath developed a picture of this system that shows mineralization in 3 main shears. First, the Bonanza shear, along the contact between the volcanics and the sediments. Secondly, the Golden Gate shear, in the volcanic rocks that the magma became when it cooled. And thirdly, the Surebet zone, where this mineralization ended up in the Hazelton sedimentary rocks. This company sure knows how to name stuff. There's another shear on top of that they called Godzilla. And the fault that they followed to drill all these zones is called the Real Deal. They make up the area of the Bonanza zone at 341,000 square meters. And all 3 zones are open in all directions. This is a huge land package with a lot going on. 12 of the holes are from a volcanogenic massive sulfide strike 40 kilometers north of the epithermal gold system called Treasure Island. VMS deposits are formed when the intrusions intrude under an ocean and the magma bends into a marine environment. In Treasure Island's case, the mineralized widths are plenty big enough and they look good. But we'll have to wait for assays to know for sure. The most famous VMS deposit in the area is definitely SK Creek. SK has both VMS and epithermal mineralization, the product of an enormous intrusion that mineralized the host rock in different ways at different distances and pressures. As SK Creek's current owner, Goliath Resources, who's currently in the process of getting the project back into production, is fond of telling us, SK Creek was the highest grade gold mine in the world while it was operating. Goliath is also talking about an outcrop to the south called Blue Origin, which looks like a reduced intrusion related gold system, which is interesting because it could mean they're onto the feeder system that put all that mineralization in the shear zones. But let's not clutter this video up too much with rocks. The size of those shears up by the Real Deal fault are the story here. The first test on that mineralization is coming in between 5 grams and 5 ounces a ton. And there's still 89 holes to report. Taking a project like this from the exploration stage to the development stage takes money. Fortunately, the company hasn't had too much trouble raising money from the usual suspects. The company's latest deck shows Rob McEwen and Eric Sprott as shareholders, owning 3.9% and 3% of the outstanding shares, respectively. Institutions and management account for another 35%. That leaves 67% in the public float. Eric Sprott and Rob McEwen are never far from a hot gold story, and you can expect that they'll be the first in line for the next financing when the time comes. Great Bear Resources might be the best and most recent example of a McEwen financed discovery. McEwen took a stake in Great Bear Resources in 2019, shortly after the company discovered the Dixie Zone in the Red Lake District of Ontario. Great Bear was trading at 52 cents at the time when they announced gold grades similar to what we're seeing today from Goliath. McEwen and McEwen Mining put $6 million into the company at $1.45 at that time, a 178% premium to the market price, and they never looked back. Great Bear then just went ahead and kept drilling holes that showed the extent of the system. They were hitting it on the step outs, and 6 months later, they made it apparent that they were onto a massive gold system, and each time the company had to raise money, they did it at higher numbers. Great Bear raised $16.7 million in November of 2019 at $8.35 a share. Then they raised $33 million at $11 a share in June of 2020. Then they raised $69 million at $12.75 a share in February of 2021. And then they were taken out by Kinross in February of 2022 for around $2 billion in cash and stock, which turned out to be a steal at $29 per share. Today, Kinross is making plans to produce about 500,000 ounces a year from Great Bear over the first 17 years. McEwen might have rode his Kinross position all the way to $15 over the past 3 years. Or he might have opted for the cash. Sprott missed it and regrets missing it. He told the financial press, "I was not in Great Bear, and I feel bad for missing it." Poor guy. The point is, Great Bear shareholders got from $1.45 to $29 by riding the discovery phase of the cycle. This one's a cliche because it's true. You can ask Rick Rule, Doug Casey, Pierre Lassonde, ask anybody. Most of the value is created during the discovery and exploration phases of a mining project. It's the period when remote rocks turn into a developing gold mine. There's risk the whole way along, but the earliest risk is, relatively speaking, the cheapest risk. Big gold producers like Newmont and Kinross are the ones who end up taking on the expense risk of permitting, development, and construction. They'll practically have to take that risk. It's how they stay in business. Small companies like Goliath spend years fighting for money in the junior mining jungle, drilling holes and receding glaciers, looking for something just like this. High-grade gold with a chance to get big enough that the majors start fighting each other over the right to pay them off. Since 2021, Goliath has spent about $63 million on exploration. Now, we like to take a look at each mining company's operating budget to see how much companies allocate to exploration just to keep them honest. Goliath is in the 70 to 80% range for their biggest and most recent years, which is no surprise for a company that's going after their prospects this aggressively. Developing a project like this to the point that it's a high-grade deposit that majors want to get in a bidding war over is going to cost money. And the next step is going to be raising that money. Expect Goliath to start raising that money after the 89 holes in the lab get back. And if they come back anything like this first batch, expect them to do it at a much higher number. Now, if you're watching this video and saying that this is the first time you've ever heard of Golden Goliath, well, they trade on the TSXV under the symbol GOT and on the OTCs under GOTRF. All right, guys, that's all I got for you today, but I'll say this, check out the description for links to Goliath Resources so you can check it out for yourselves. Also, let me know what you think in the comments section if you are impressed by these drill holes and if you think this company has a shot at being the next Great Bear. Guys, let's follow this name as a community and see how they follow up these most recent results. All right, everybody, thank you for watching.